So you all, I think, are used to a cohort system. We've decided to do this on a rolling application basis where we will get back to the business within 90 days. The legislation was signed into law about a month ago. It goes into effect in July or August. So the 90 days for the first applications would start running then, which means people would be accepted in around October or November. There's an application form, which I think will be broadly familiar. We're looking at how the innovation benefits consumers, why it's new, why is this an innovation, how is it different, what are the risks, what does a successful test look like, what's your plan, how will you protect consumers. And as we're a state, we need to have jurisdiction. So that means you need to have an entity in Arizona, we need to have an agreement with someone who regulates you. There needs to be some way that we can get a court to give us the information we need if something goes wrong. The scope, it's a longer runway, 24 months with an additional 12-month period to obtain a license. We went with a 24-month period because we want to serve local entrepreneurs who are starting their company, I think, at an earlier stage. And we want folks to be able to obtain licenses, whether it's in other states or from the federal government. And that takes a long time. If you're trying to get 50 state licenses, that can be very burdensome. So that's why we have a 12-month period. Also based on our experience with other federal licenses, if there ever is a federal FinTech charter, we don't know how long it will take to obtain, but it probably won't be real fast. We have transaction limits. You can serve up to 10,000 consumers. They have to be in Arizona. There are a lot more details built into this legislation than you may see in other sandboxes. And that's because this went through a legislative process. We thought about going to the legislature and having a bill that basically said, trust us to be fair and honest and to do this correctly. And we were told that that would not be successful. So we had to write in what we thought was an appropriate test. So the products being tested are primarily products that would otherwise be licensed by our Department of Financial Institutions, money transmission, consumer loans, mortgage brokers. We can also work with our securities department for investment advisor products. And we have some caps on the loans that can be offered. On the money transmission limits, we set that at $2,500 because one of the complications in the United States of a sandbox is that we have a dual system. You have to worry about federal regulation in addition to state regulation, and those federal FinCEN requirements start kicking in at around $3,000. So if you already have an AML and a KYC compliance structure, we have the ability to authorize higher levels of money transmission products that match the consumer loans, so up to $15,000. And we also will let you service more consumers, up to $17,000. But if you don't have that, we don't want you to go to jail. And so we're going to have some explicit caps there. So what do the records and retentions look like? Primary requirements, we want you saving everything that you're doing in the ordinary course so that we can access that. If something goes wrong, we need to be able to access your records. We need to be confident that we can do that. We can require additional reporting if we think that makes sense for your particular test. And then we have some specific protections. One of the big concerns in Arizona was that this would not be some sort of backdoor for payday lenders. We tried to convince folks it's the opposite. We're actually bringing competition into this area that probably needs more competition, but we have our interest rate caps are retained, 36%. You can't do balloon payments, all these sorts of things, and the Consumer Fraud Act still applies. In fact, we can suspend participation based on reasonable cause of a violation. So that's the standard that we would normally use to open an investigation. What that means is this is an unattractive vehicle for people intending to commit fraud. You will get caught and punished faster than you would any other sphere. I can talk a little bit about how exit and wind down works. 30 days before the 24 months are expiring, we want to be notified of what you're planning to do, applying for a license, exiting the sandbox, and then how you're executing the plan that you've proposed. Are there loans that need to continue to be serviced? Who's going to do that? Are you going to continue operating it? Will those be serviced by someone else? And of course, there is the extension that I mentioned. Now, I mentioned federal regulation, and that is a major consideration for anyone who is operating within the United States. What we're trying to do is work with the federal regulators. There has been no federal regulatory sandbox, and I think a growing number of people have pointed this out and said that it has made the United States less competitive. What we have proposed to the agencies is we've identified in their enabling statutes everyone in our sandbox is covered by our Consumer Fraud Act. We have appropriate consumer protections. You can grant limited exemptions for these entities so that folks aren't wondering who is regulating them, and you can overcome this deficit that we have at the federal level. So we're optimistic on obtaining those sorts of agreements with some federal agencies. We're also actively reaching out to regulators overseas because we want to be the launching point when people expand into the US.